Today is a very happy day for all of us, for all of the officers at the 247 faculties as well as the you guys. Like whatever we taught here, whatever the questions we just actually focused on, and exactly the things or the exactly the questions you just got in the examination, and this is a really proud moment for all of the officers at the 247 faculties. So yesterday when I just saw the comments, mostly students just come with the 60 plus marks, and this is a really real achievement for all of for all of the officers under 247 faculties. First for the PPB, another one that is for the AFB, and I'm sure for LRAB also. You guys just hit the exam very hard, and that is we really want. So I hope these lectures are very helpful in your preparation. So do not escape just one lecture. Please do not escape. Okay. So let's start today's session. What update from our side, that is currently sale is live, and you can just avail the 80% off with the code that is 5422, and with this code you can avail the discount on the mock test book, ebooks, as well as the video sessions. And from yesterday's and from the PPB sessions, you just understand how much important the video sessions for you guys for just preparing the examination. Okay, one update also from our side, that is our target batch is just going to start from the 7th March, and you can just avail the maximum discount with the code that is Y422. And this type of the sessions are very important, because now we just know what type of the questions actually examiner is just asking. We have a full compilation of data, so we actually prepared for you guys for just not for the clearing, actually you just get a very good marks in the examination. Okay, so we will discuss the basic questions. We will discuss first the basic concepts, after that the easy questions, medium questions, advanced questions, and everything you will get in the one batch, and that is very important. So I think you should just enroll in these batches, and now let's start the session. Okay, so in the examination you will get the questions like the bond value is given, coupon rate is given. Let me just fix this 1 minute. Okay. Okay, so just read the question, and after that how I just explaining you only have to capture whatever I'm just conveying to you. Okay, so the question, that is a bond whose face value that is given just 1,000 rupees, and it bears a coupon rate. Last lecture we just understand what is the bond and what is the characteristics of the bond. If you just remember that in the last lecture, that is on the Saturday, and on the Saturday morning we already discussed what is the bond and what is the characteristics of the bond. So that lecture is very important to understand, okay, these type of the questions. So what we taught in this last lecture, like this is a bond, and this is a bond, and this is generally issued by the government and corporations. Okay, and whatever the government or corporations is issuing, that is known as the issuers, and who just going to purchase this bond, that is known as the investor. Okay, so we understand all of this thing, and from the bond, and this bond is actually known as a fixed income type instrument. And this is very important thing to understand from the exam point of view. So this is also known as a fixed income type instrument. Okay, so I hope this is very important. Okay, and I hope everyone is understanding this. So from the bond, actually investor is just going to receive the interest as well as the principal. Okay, so whatever the maturity period of the bond is mentioned on the bond paper, so that is purely based on that. Like if the maturity of the bond, that is here given, that is 3 years, so that means for the first year the investor is going to receive the interest. Investor is just a general public who just purchased this bond. Okay, and bond is just using for the raising the fund. All right, so if it is just issuing for the 3 year, that means for the first year interest will receive, for the second year interest will receive, and for the third year, because this is a maturity time for this bond, so it just investor is going to receive the interest as well as the principal, and that is the basic concept for the bond. I hope it is understandable, right? So what I taught you, the whenever you just find the value, like whenever you just saw in the examination, that is the face value is given and the coupon rate is given, just multiply with that with a blind eyes. Okay, whenever we just have to just find out the annual interest earned, whenever we are just talking about the annual interest earned, so that is your face value and it is multiplied by the coupon rate, and that coupon rate when multiplied by the face value, just you can just derive that is annual interest earned, and that is most of the time you will get the question in the 1 marks, that is what will be the annual interest earned of the bond. So you can very easily you can derive this, right? So the face value when it is given like 1,000 rupees and the coupon rate that is given 12%, so you can easily just multiply with this and you will get the 120 rupees, that would be annual interest earned by the investor. Okay, now the another thing that is given, the required rate of return on the bond is 10%. The required rate of return, that is your 10%, and this required rate of return just convert into the YTM, that is yield to maturity, if the investor is just holding this bond till the maturity, right? So when we have to just solve these kind of the questions in the examination, what we exactly do, one formula we all have to every time memorize, that is present value that is equal to the future value, and it is divided by the 1 plus r to the power n, that's it. Okay, and this n, that means n denotes the number of the payments, n denotes the number of the payments, and this r denotes your like discount rate, this r just known as a discount rate, this r is known as a required rate of return also. Okay, so if we have to just derive this question, like in this question the values is already given, like PVIFA 10% 3 year is already given, but in case it is not given, so how we can just calculate this question in the exam, we have to understand here, just understand, look. So we, as I just explained you, that is present value is equal to future value and it is divided by the 1 plus r to the power n. That means we are just talking about for the bond that would be matured in the 3 years, right? So for the first year, that means investor is going to receive the interest, that is 120 rupees, as I just explained earlier. And in the second year, he will just going to receive 120 rupees again, and the third year he will just going to receive 120 rupees as well as 1,000 rupees. Okay, so this is the actually cycle of the bond, right? So now if we have to just calculate the present value of this bond, so how you can calculate, like for the first year, that is actually your future cash inflow. Okay, so like 120 rupees and and you have to just calculate the present value of this future cash inflows. So for the 120 rupees, for the first year 120 rupees, that means till this time only one payment you just done by you, and the required rate of return bond, that is 10% is given. So just write here 0.10 and just it is to the power of the 1. Again for the second year, if I say that what will be the value, that will be 1 plus 0.1, and it is to the power 2, because now the second payment is done. Okay, and for the third year this 120 will be there and this 1000 would be there, and for this 1 plus 0.1 to the power 3. Okay, so this is how we actually calculate, and this value we can also just write here, that is 120. Okay, so now what I'm just going to say, either you can just solve by this equation, or the value is already given in the exam, like the value it is given PVIFA, this is actually just known as the present value interest factor annuity. Okay, so from the question I'm just trying to just explaining you the concept behind the board questions. Okay, so this is your present value interest factor annuity, and this is your present value interest factor, right? This is your present value interest factor. So whenever you have to solve like this 120 divided by the 1 plus 0.10 to the power 1, 120 divided by the 1 plus 0.1 to the power 2, and if we have to just write this, we can also just write this like this. 1 minute, just a 1 minute. We can also write this like for the third year, the investor is going to receive the interest as well as your principal. So you can also write this like this way. Okay, so now the all values, like this 120, if I just write here, and this PVIFA, that is actually your present value interest factor annuity. Annuity, like I already explained, whenever you see the term that is annuity, that is actually nothing but a series of the payment. So whenever you find anywhere that is series of the payment, that means there you have to apply the annuity formula. Also there we have, you have to just understand with the annuity term. Okay, so like I'm going to say here, so this would be our interest, and this all the factors, actually the value of all the factors is given for the annuity. And we understand that for the one, because this 120 rupees for the first year, this 120 rupees for the second year, this 120 rupees for the third year, so that makes the annuity actually. So annuity, that is a series of the payment at regular interval. Okay, so this value is already actually given, that is PVIFA form, and so we only have to just multiply it with the 2.487 plus 1000 rupees. Now this value is given the PVIF. This is known as a PVIF. So whenever you have to understand what is a present value interest factor, so you always have to understand that is your present value interest factor actually. Okay, so if the term that is present value interest factor annuity is given, so you can just simply just multiply with this, because all the values is already given here, right? And if this is only given that is present value interest factor, that means look, in this 1000 is only one time you are just receiving. Okay, this is not the series of the payment, like you just receiving the 2 times, 3 times, 4 times. Okay, this is the one time that you are going to receive the principal, so that's why the term that is present value interest factor is given. So this value is already given in the question, like you only have to just write 0.751, and after that you solve, you have only have to just solve this equation and tell me what will be the answer here. Just tell me what will be the answer. So this value would be your 298.44, isn't it? Let me solve this, and this value will be 751, right? So what will be the answer here? That is 1049.44. So that would be your answer. I hope now it is understandable. Look, this type, look, you will find multiple questions in the exam based on this concept. So you have to understand both the concepts here. Okay, so look, this is the first method where you just already just given the all the values, like present value interest factor annuity. So we just actually in whenever we have to solve this question, we can easily solve. Look, so whenever you find any kind of the questions like this in the exam, you simply have to just write here this, and whenever you just see that is face value is given, coupon rate is given, so the only thing that you just multiply with this and you will get the annual interest, and you know that is the annual interest which is just receiving for the 3 year continuously. Okay, so this present value interest factor is annuity is already given, so just multiply with this and just 1000 multiplied by the 0.751, and that would be your answer. Look how simply you can just solve this question in the examination. So that answer will be your 1049.44. That would be your answer. I hope it is now clear for everyone. Now understand how to solve this question by the method I am just explaining you. Okay, now understand if the value is not given in the examination, like this value is not given, present value interest factor annuity is not given, and this present value interest factor is not given, so how you can solve this question, so the first thing that you have to understand, whenever you just see that is face value is given and the coupon rate is given, just multiply with this and you will get the annual interest earned by the investor. Okay, and this question is actually just asked in the examination, like what is the annual interest of the face value and the coupon rate and the YTM, or say required rate of return of the bond that is given. So you do not have to confuse between the required rate return on the bond and the coupon rate, because coupon rate always apply on the face value and that makes the annual interest earned, right? So you have to just write here 120 for the first year, that is 1 plus 0.1. This 0.1 actually is a 10% required rate of interest. So that would be the for the first year. For the second year, the 1 plus 0.1 to the power 2. For the third year, this 120 plus 1000 divided by the 1 plus 0.1 to the power 3. Okay, so now the just solve this by your side, and after that I will just calculate this. Okay, so whenever you just going to solve this, 120 divided by the 0.1, 1.1, so that would be the value 109.09, right? Okay, another value 120 divided by the 1 plus 0.1, 1 plus 0.1 to the power 2, so that would be the value 99.17. Okay, another value that is 120 plus 1000, that makes 1120, and it is divided by the 1.1 to the power 3, so that value become, what the value will be, just tell me what would the value. Either you can also just write this in this way, that is 120 divided by the 1 plus zero point 0.1 to the power 3. So that is your option. If you just you can also just write here in this way, 100, that is 1.1 to the power 1, 120 divided by the 1.1 to the power 2, 120 divided by the 1.1 to the power 3, as well as 1000 rupees, that is 1.1 to the power 3. Okay, so this value would be, just tell me what will the answer here, that is 90.157, and this value would be 751.31. Okay, so now what will be the answer here? So the again answer what will get, that is 1049.44, that is approximately. Okay, so this is how we solve the bond questions in the examination. I hope it is now clear for everyone. Next question, that is a bond whose face value that is given 1000 rupees and it bears a coupon rate of 12% that payable semi-annually. Okay, and has a maturity period of the 3 years. The required rate of return on the bond that is given 10%. So what will be the value of this bond, or say the values all given here, like PVIFA, that is present value, interest factor annuity, and the present value interest factor that is given. Okay, all right. So the thing here we have to understand, whenever we find the questions related to semi-annually, half-yearly, what exactly we do in the compound interest. If you just memorize that, we already understand in the compound interest chapter how to just solve the questions of the half-yearly, semi-annually questions. A is equal to P, that is multiplied by the 1 plus R divided by the N to the power just N multiplied by the T, where this N denotes the number of the time interest is compounding. Okay, so like if the case of the half yearly, if the case of the semi yearly, that means we have to just put the value of the N that is equal to the 2. Okay, if the case of the half yearly or semi annually, it is just given in the exam, in the question. Okay, so we just understand this formula in the compound interest chapter, and now we have to just understand how to solve this question in the examination. So here in this question that is given a coupon rate that is 12% and the face value that is given. So I always explained you, whenever you just see that is face value given and the coupon rate given, so that means you have to just find out the annual interest earned. Okay, but in this case a term that is it is payable semi-annually, that means we can just find out here semi-annual interest earned. And okay, and that would be your just a 60 rupees. Why? Because the same procedure, that is 1000 rupees, and that is going to multiply with the 12%, that is your coupon rate, which is annual, but it is payable semi-annually. So just you can write that as 12%, that is divided by the 2, and that would be your 60 rupees. Okay, I hope it is clear for you guys. Now the thing that if this is a question of the bond and you will just maturity period that is given the 3 years, that means the time period that would become, if it is for the 3 years, that means the time period for interest that you are going to receive, that is 6 years. Why? Because 3 years, that is multiplied by the 2, that because the interest is semi annually. Okay, so and the rate of interest that would also be just half, like the required rate of return on the bond, that is 10% given. So if the required rate of return, that is 10% given, that means it would become that is 5%. Okay, and the time period, that would be doubled. So I hope this concept is clear for you. So if we have to just calculate now the value of the bond, so how we can calculate? So we know that 60 rupees, and that 60 rupees the investor is going to just receive in the 6 period cycles. So if I say that is this 60 rupees, that denotes the annuity. And if we have to solve this question, that is present value interest factor annuity, and the required rate of return, or that is given 10%, but it is semi annually, so it would become the 5%, and it would be for the 6 years. Okay, plus the face value of the bond, which is just at the maturity time, that is 1000 rupees, and present value interest factor 5%, and 6 years. So now the values already given in the this question. So what you have to do, you have to just simply put the value here, 5.0746 plus 1000, that is 1000, and multiplied by the 0.746. Now the only thing that you have to just calculate this, and you will get the value 304.48 plus, and this value would become 746. So the answer, that would be, just calculate and tell me what is the value of the bond. So that would be 1050 rupees, 0.48 rupees. Okay, so that would be your the value of the bond. I hope it is clear for all of you, right? So this is how we just solve these kind of the questions in the examination, and this is a very important, because in the exam you will get these type of the questions in the 2 marks. So I hope it is now very understandable for everyone. Okay, so that's all for this session, and I hope you just enjoy this session. If you're liking our effort, please do not forget to hit the like button on this video, and if you're not downloaded the Adda 247 application, just download this and subscribe the Officers Adda 247 YouTube channel, so that you can get the notifications of the live lectures, as well as the notifications of the important news that is related to your examination. So thanks for watching me here, thanks for joining me here. Like this video if you're liking our effort, share this video to your friends, so that maximum number of our colleagues can join with us. Update from our side, that is registration for our target batch is just open, so you can enroll in that batch. And we often think that why batches are important, or say why enrolling in the batches are important, because in the batches you will get everything. Like you just do not need to worry what type of the things, what type of the numericals, what type of the contents you actually just have to read. In the batches you will get everything, because we all are just experienced faculty, and we know what type of the questions just examiner may be asked. Okay, so we discuss all of the things in the batches, so these batches are very important. So for your clearing the examination, so you can just enroll in that batches, and the process is very simple, right? Like only have to just write Adda 247 JIB video courses, like in this the adda247.com/JIB exam kit, and in these you will get the multiple batches where you can just enroll. Okay, and the process is very simple. And the thing that I just want to tell you, like if I just have to enroll in the JIB video courses, so there are multiple batches that are currently running. Okay, and that just going to start, and we are just talking about the target batch. Okay, so this is a target batch in which the classes is going to start from the 7th March. So this is the process how you can just enroll in that batch. So this is a study plan like PPB, AB, LRAB, and all of the things you just get in one batch. You will get the questions and answers, you will get the theoretical part, everything you will get. Okay, so these are the just overview for this batch. And now the thing that how you can just enroll in that batch. Okay, so when you just go to in the buy now option, and you will get the total amount, that is 12,999, which is just 13,000 approximately, and this is a huge sum, but you can get the discount. Okay, and you can get the maximum discount, that is Y4, with the code that is Y422. You only have to just apply the code Y422, and with this code you Y422, and with this code you can just get the maximum discount. Okay, and now just see that you only have to pay 2599, and from for this amount you can get everything. Okay, and this is, this is a only one time investment that you can do for your examination.